So my name is Yoshida. Today, I would like to explain the consolidated financial results for the fiscal year ended March 31st, 2023. Consolidated net sales for the fiscal year ended March 2023 totaled 1,292.203 billion yen, while operating income reached 101.522 billion yen, and profit for the period attributable to owners of the parent hit 77.010 billion yen. This is a year-on-year increase of 15%, 10.2%, 11.7% respectively for net sales, operating income, and profit for the period attributable to owners of the parent, etc. And for all the items, including net sales and operating income, etc., we hit a record high. Net sales increased for 11 consecutive terms. Operating profit increased for 2 consecutive terms. Foreign currency exchange rates are estimated to have a year-on-year impact of plus 157.9 billion yen in net sales and plus 29.1 billion yen in operating income. Operating income includes 14.5 billion yen of special factors. More details of the special factors will be provided later. Moving on to the next slide. Consolidated net sales for the fourth quarter of the fiscal year March 2023 was up 17.3% year-over-year and down 8.5% quarter-on-quarter to total 339.718 billion yen. Operating income was up 58.9% year-on-year and up 30.3% quarter-on-quarter to reach 34.441 billion yen. Profit for the period attributable to owners of the parent increased by 2.1 times year-on-year and increased by 2.5 times quarter-on-quarter at 33.068 billion yen. Net sales hit a fourth quarter record high, and operating income hit a quarterly record high as well. We estimate that foreign currency translations have a year-on-year impact of plus 33.6 billion yen in net sales and plus 4.1 billion yen in operating income. Quarter-on-quarter impact was minus 17.8 billion yen in net sales and minus 4.8 billion yen in operating income. Operating income includes 20 billion yen of special factors. More details of the special factors will be provided later. Please turn to the next slide. This is the annual trend in net sales, operating income, and operating margin. The bar graph on the left is net sales, and the one on the right is operating income, along with a line chart for the operating margin. The operating margin for March 2023 was 7.9%. This was down 0.3 percentage points year-on-year. Next slide, please. Since there were several special factors such as one-time costs and one-time profits in this fiscal year, we will use this chart to organize them. Firstly, operating income was estimated at 102 billion yen in the initial forecast we announced in May last year. Compared to this, there was a gain on the sales of the former Tokyo headquarters and others as one-time profit of 40.4 billion yen and one-time cost of structural reform costs minus 17.2 billion yen and forex forward contract minus 8.7 billion yen. Excluding these special factors, we estimate that the downside of the business was 15 billion yen. It means that operating income on the business basis, excluding these special factors, was 87 billion yen. Moving on to the next slide. This is for the quarterly trend in net sales, operating income, and operating margin. The operating margin for the fourth quarter was 10.1%. This was up 2.6 percentage points year-on-year and up 3.0 percentage points quarter-on-quarter. Breakdowns of special factors for each quarter of this fiscal year are shown in the boxes for your reference. Please go to the next slide. We have changed the names of the business segments since April 2023. By matching the name and the reality of the segment, we will improve understandability and enhance corporate value. The machine components, electronic device, it will be PT. Electronic devices and components will be motor, lighting, and sensing, MLS. Mitsubi business will be semiconductors and electronics, SC. The using business would be Access Solutions. There is no changes made to the operation of each business segment. Both the new and old names will be shown on the following slides. Next slide, please. This slide shows the difference between the forecast as of February and actual results for net sales and operating income by business segment for the fourth quarter. Net sales for the machine components business were higher than projected, mainly due to steady sales of bearings and aircraft components. In the electronic devices and components business, although sales of HDD motors fell short of a forecast, overall sales were higher than projected thanks to steady sales of other motors and LED backlights. The Mitsumi business experienced lower than expected sales, mainly for optical devices. Net sales for the using business were generally in line with the forecast. Operating income for the machine components business and the electronic devices and components business were generally on track with the forecast if the special factors were excluded. Operating income for the Mitsumi business fell below our forecast due to the special factors and declined revenue associated with the slowdown in the optical device sales. The using business's operating income was less than projected due to deterioration in regional product mix, even if we excluded the special factors. Next slide, please. Now, let's take a look at the results by segment, starting with machine components. Remained Precision Technologies segment. On the left is a graph indicating yearly net sales trends, and on the right is a graph with a bar chart showing yearly operating income trends, along with a line chart for operating margins. In the fiscal year ended March 2023, net sales were up 11.2% year-on-year to total 197.3 billion yen. Sales of ball bearings increased 14.2% year-on-year to reach 146.2 billion yen. The monthly average of bearing sales volume totaled 226 million units for a decrease of 5% year-on-year. Looking at sales by application, we see that sales for products for automotive applications increased while sales for those for data centers and home electronics declined. Sales of rod ends and fasteners were up 30.4% year-over-year to total 35.2 billion yen. It's recovering steadily from the effects of COVID-19. Sales of pivot assemblies decreased 29.3% year-on-year to total 15.9 billion yen. Operating income for the fiscal year ended March 2023 totaled 43 billion yen, putting the operating margin at 21.8%. We saw operating income decrease 6.1% and the operating margin declined by 4 percentage points year-on-year. Looking at the year-on-year results by product, we see that the operating income for rod ends and fasteners rose, while operating income for pivot assemblies and ball bearings declined. If the impact of special factors such as forex forward contracts, structural reform costs were excluded, operating income for the fiscal March 2023 would have decreased 1% year-on-year, and operating margin would have decreased 2.9 percentage points year-on-year. For the fiscal year ending March 31st, 2024, we expect sales of ball bearings to increase due to gradual recovery for demand for automobiles, and demand for service is expected to recover from the second half of the fiscal year. In our aircraft-related businesses, including rod ends and fasteners, we expect full-scale recovery in the second half of this fiscal year. For pivot assembly, we also expect recovery of demand in the second half of the fiscal year. Please go to the next slide. This slide shows the quarterly trends. Fourth quarter net sales decreased 2.7% quarter-on-quarter to total 49.1 billion yen. Sales of ball bearings decreased 6% quarter-on-quarter to total 35.3 billion yen. The monthly external shipment volume was down 8.2% quarter-on-quarter for an average of 206 million units. This was due to the slowdown in the market, mainly for data centers. Sales of rod ends and fasteners totaling 9.8 billion yen were up 2% over the previous quarter. Sales increased with the recovery of aircraft production. Sales of pivot assemblies increased 21.5% quarter-on-quarter to total 4 billion yen. Operating income for the quarter totaled 8.7 billion yen, and the operating margin was 17.7%. On a quarter-on-quarter basis, operating income decreased 24.9%, while the operating margin dropped 5.2 percentage points. Looking at the results by product, we see that operating income for ball bearings and pivot assemblies decreased quarter-on-quarter, while operating income for rod ends and fasteners was increased compared to the previous quarter. These include the impact of the special factors as noted earlier. Please go to the next slide.
Now let's look at the electronic devices and components segment, renamed the motor lighting and sensing segment. In the fiscal year ended March 2023, net sales were down 1.3% year-on-year to total 366.3 billion yen. Looking at the results by product, we see that the sales of a motor increased 2.2% year-on-year to reach 272.9 billion yen. This increase was due to steady sales of motors, mainly for automobiles. All the motors for HDDs have slowed down. Electronic devices sales were down 19.7% year-on-year to 51.6 billion. Net sales of sensing devices totaled 37.5 billion yen, increasing 5.9% year-on-year. Operating income was 0.9 billion yen, with the OP margin of 0.3% compared to the previous fiscal year. Operating income decreased 95.7% and the OP margin declined 5.5 percentage points. Looking at the results by product, we see that operating income for motors, electronic devices, and sensing devices will all declined. If the impact of special factors such as FX forward contracts, structural reforms costs, and others were excluded, operating income for March 2023 would be an increase of 45.3% year-on-year, and the operating margin declined 2.6 percentage points year-on-year. In the fiscal year ending March 2024, we expect increases in both sales and operating income for motors due to gradual recovery in demand for automobiles and the recovery in motors for HDDs through the second half of the fiscal year. For the electronic devices, sales will be almost flat, but operating income is expected to slightly decrease. Sales and operating income of sensing devices will be almost flat. Next slide, please. This slide shows a quarterly trend. Net sales increased 6.1% quarter-on-quarter to total 96.2 billion yen. Looking at the results by product, we see that sales of motors increased 12.2% quarter-on-quarter to reach 73.4 billion yen. This is mainly due to a recovery in the demand for HDD motors. Sales of electronic devices were down 15.6% from the previous quarter to total 12 billion yen. This is due to seasonality of LED backlight models used by our key customers. Sales of sensing devices totaling 9.3 billion yen were down 5.8% from the previous quarter. Operating income came to 4.6 billion yen and the operating margin was minus 4.8%. On a quarter-on-quarter basis, operating margin dropped 6.9 percentage points. These include the impact of the special factors as noted earlier. Next slide, please. Let's look at the performance of the Mitsumi business segment, renamed the Semiconductors and Electronics segment. Net sales increased 23.6% year-on-year to total 530.5 billion yen. In March 2023. This is mainly due to increased sales of optical devices. Operating income came to 42.7 billion yen and the operating margin was 8.1%. These figures represent 2.1% year-on-year increase in operating income and 1.7 percentage point year-on-year decrease in the operating margin. Operating income for optical devices, mechanical components, and power supplies increased while other business saw a decline. If the impact of special factors such as negative goodwill for Sumiko Tech, structural reform costs, and FX forward contracts were excluded, operating income for the fiscal year ended March 2023 would be an increase of 14.3% year-on-year, and the operating margin declined 0.8 percentage points year-on-year. In the fiscal year ending March 2024, though sales and operating income in optical device and semiconductors are expected to remain steady, overall we anticipate a slight decrease in both sales and operating income due to an expected decrease in sales and operating income in mechanical components. This slide shows the quarterly trends. Net sales decreased 32.3% quarter-on-quarter to total 123.6 billion yen. This was due to decreased revenues accompanied by seasonality of optical devices and mechanical components, etc. Operating income totaled 0.6 billion yen, while the operating margin was 0.5%. Operating income decreased 96.5% and the operating margin declined 9 percentage points quarter-on-quarter. These are due to a decline in operating income income as a result of lower sales for optical devices and mechanical components, as well as the special factors noted earlier. Finally, let's look at the U-Shin business, renamed Access Solutions segment. Net sales increased 33.7% year-on-year to total 194.7 billion yen in March 2023. This is due to a recovery in sales to the automotive industry, in addition to the performance of Minebea Access Solutions, formerly Honda Lock, which became our consolidated subsidiary as January 27th. Operating income came to 22.3 billion yen, and the operating margin was 11.5%. These figures represent a 30.5 times year-on-year in operating income and 11 percentage point year-on-year increase in the operating margin. If the impact of special factors such as structural reform costs and negative goodwill for Honda Lock were excluded, operating income for March 2023 would be 2.8 times growth year-on-year, and the operating margin would be 0.6 percentage points up year-on-year. In the fiscal year ending March 2024, we expect an increase in sales and operating income due to impact of business integration and recovery of automobile production. Next page, please. This slide shows a quarterly trend. Net sales increased 50.1% quarter-on-quarter to total 69.5 billion yen. This was due to the addition of Minebea Access Solutions result, as noted earlier, while our operating income total 21.7 billion yen and the operating margin was 31.3%. Operating income increased 83.9 times. And the operating margin rose 30.7 percentage points quarter-on-quarter. These include the impact of special factors as noted earlier. Next slide, please. The bar graph here shows full-year trends in profit attributable to owners of the parent, while the line graph chart changes in the profit for the period per share. The profit for the period was 77 billion yen. Earnings for the period per share was 187.6 yen. The profit for the period and earnings for the period per share hit record highs. Next slide, please. The bar graph here shows a quarterly trend in profit attributable to owners of the parent, while the line graph chart changes in the profit for the period per share. The profit for the period was 33.1 billion yen. Earnings per share was 80.6 yen. Both quarterly profit and earnings for the period per share hit quarterly record high. Next slide, please. Next, we have quarterly inventory trend. At the end of the fourth quarter, inventory total 263.1 billion yen, which is 12.8 billion yen less than what it was 3 months ago. This is mainly due to the strategic operation controls in ball bearings, spindle motors, and others. Next slide, please. This graph contains a bar chart showing trends in net interest-bearing debt, which is a total interest-bearing debt minus cash and cash equivalents, and the line chart indicating free cash flows. At the end of the third quarter, net interest-bearing debt totaling 201.7 billion yen was up 114.7 billion yen from the end of the previous fiscal year. This was mainly due to the purchase of the new Tokyo headquarters related expenditure, and the expenditure associated with M&As and increase in working capital due to higher inventories, etc. At the end of the fiscal year ending March 2024, the cash position is expected to improve thanks to the strong ability to generate the cash. Next slide, please. This is a summary of the forecast of the fiscal year ending March 2024. This fiscal year, we expect to achieve new record highs in sales. Although net sales are expected to decrease in mechanical components, growth in bearings, motors, and access products, and business integration of Minebea Access Solutions will make up for it, with overall net sales expected to increase to 1,450 billion yen. Operating income are expected to increase in precision technologies, motor, lighting, and sensing, and access solutions in anticipation of a market recovery from the second half of the year. We assume that operating income, excluding special factors, will increase compared with 87 billion yen for the fiscal year ended March 2023, as noted earlier. The exchange rate is assumed to be 130 yen to a US dollar. Next page, please. This slide shows the forecast by business segment. This is the end of my presentation.